Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, and a show where we tell you all the latest updates at half hour time when you talk about the stock markets trade. Also the benchmark indices, how are they trading at this point in time, the sectors, the stocks that are buzzing in trade today, and also more importantly, what should be your investment strategy as we see continuous dips and declines in the markets as well. We'll also be joined by an expert in just a bit, but first up a quick check of the markets at this point in time. Sensex down by 318 points, 60,755. That's the print right now. 18,099 for the Nifty. That's down about 100 odd points at this point in time too. There has been a decline from the opening levels. We did see some green right at the opening levels, but the broad-based sell-off has taken the markets to near its lowest point at half-time trade as well. Let's look at the broader markets. Where is the pressure really coming in from? The broader markets, of course, the mid and the small caps, they are the ones that are creating this pressure. 1.8% down for the small caps. So from yesterday, they extend the decline even today. The India VIX levels are not starkling high. It's 1.8% uptick right now, 15.8, but continuously keep an eye out on that one too. Sectorally speaking, all the sectors of the Nifty are deep in the red. Which are the ones that are actually causing this sharp decline? It's the PSU banks that have been seeing some profit booking from the last 3-4 trading sessions as well. The realty pack continues to be on the declining space as well, 1.4% down for this one. The banks overall are down in trade. Metals are seeing some sheen being taken off the table as well. 1.3% down for this one. 1.2% down for the auto space as well. Slight declines coming in on the IT, FMCG, the pharma majors as well at this point in time. So the advanced decline ratio clearly in favor of the declines. 41 stocks of the Nifty 50 still in the red. Which are the stocks that are seeing the maximum cuts as we speak? On the top losers front, you do have Bajaj Finserv down by over 3%, UPL's BPCL, Tata Steel and Tata Motors, some of those Tata Group stocks also seeing a cut of over 2.5% odd. On the upside, you do have a far and few between stocks like Apollo Hospitals, SBI Life, Sun Pharma, Kotak Mahindra Bank and Bharti Airtel, all from different sectors. Clearly, no trend really there, but some far and few between stocks that are showing them up move right now. Let's welcome our guest for the day. Gaurang Shah joins in. He's the head investment strategist at Geojit Financial Services. Welcome, Gaurang, and thank you so much for taking the time out for this discussion. Well, the markets have been selling off right from yesterday because there are increasing worries about the spiking COVID numbers in China, Brazil, then Japan and even US. Now, God forbid, if the COVID numbers really swell up, do you really anticipate a sharper sell-off or huge profit booking?
Well, thank you, Sakshi, for having me on the show, and good afternoon to all of you also. I think this news flow has played its part in the past eh, when we saw the pandemic hit the entire world, and we saw the kind of reaction that the markets gave, not only in our markets but the markets across the globe. So the severity of this, what we have been given to understand since yesterday by the government and their representative, that the situation is under control. And this variant that is being spoken about looks to be a little bit lower in terms of having any kind of serious impact, whatever data points have been told to us. And not to forget, the problem with or the issue with the situation escalating to this effect is basically because they had a severe lockdown up until recently. And because of the protest over there, there was a little bit of relaxation by the government over there. And when you open up suddenly after such a very stringent kind of a lockdown, naturally the numbers are going to go up because people are vulnerable since they were in lockdown situation and now they are exposed to all kind of reality. Numbers will swell up. There are possibilities that you will find a little bit of escalation in terms of mortality rate also. And the variants may change their avatar time and again. But over here in our country, in India, I think the situation is not that alarming. Some cases have been detected and they have recovered also. That is what the news reports tell us. Uh, Knee-jerk reaction to the news flow of this pandemic again shaking the world is naturally going to impact the market across the globe. Surprisingly, yesterday we saw US markets close in green. But our markets, which have been outperforming, we've seen 3 days of selling pressure. Of course, day before yesterday, we did recover from the lows. Yesterday, there was a sharper sell off because of the news flow, and today, the continuation. So
Right.
we may see, because we don't know, Sakshi, as to when, how, and in what scenario the news flows develop, for good or for bad. So one will have to just, go through this kind of volatile time. Not to forget, we are fag end of the year. We are entering the FNO expiry next week.
Hmm.
But my sense is that on the fundamental side, if you ask me from a long-term point of view,
Yeah.
such corrections are a great opportunity to buy into quality stocks.
Okay, so the correction could be great opportunity to buy into. We are seeing some upticks from the lowest point of the day. The Nifty is down by 96 odd points right now. 18,100 is what you can see. Continuous efforts by the markets to really pull up from those lows. We'll keep an eye out on that. And I'll also discuss with you further on the markets as well. But let's talk about the big news that came overnight, and that's Reliance Industries and Reliance Retail that has acquired Metro Cash and Carry for about 2850 crore rupees. Now, through this acquisition, Reliance Retail really gets access to a wide network of outlets and the retail and institutional buyers too, and a strong supply channel. I want to understand your point of view on this development, and how is this really going to benefit Reliance Industries and Reliance Retail's venture as well? And also, to take that point in the same breath, why are the shares really sulking at this point?
This is a large cap, Shakshi, and when you have markets down, Nifty 100, Sensex 300 plus points, large caps are going to be the first ones to take the hit. So
Hmm.
not surprising, but let me say this as a disclosure also. We have been maintaining a buy call on the fundamental side on Reliance Industries. And I think whatever they've been doing recently in terms of reinventing themselves and stepping into newer businesses with focused acquisition, investments with great numbers. Uh, my sense is that this is a stock that you should possibly accumulate on all dips and hold on to it from a long term point of view. And this acquisition that we are speaking about of about 2,800 crores of Metro Retail, I think it's a very thought out strategy. Remember one thing, India has a population of 140 crores. And historically, we have been a consumption driven country. When you have this kind of a huge consumption base, and when you have the appetite to cater to the demand of such consumption, then I think you are not going to go wrong when it comes to increasing your footprints in the retail segment with acquisitions. And I think it is a more stronger strategy because like you mentioned, it is a ready to available platform, the acquisitions, to increase the market share. So I think it's a well thought out business strategy. And with the kind of other businesses they have, digital, telecom, and they are venturing into green hydrogen.
Yeah.
Historical businesses are looking quite strong. Refining is looking quite strong. So I don't think you're going to go wrong because you have a huge base of the pyramid to cater to, and you already have your presence and you're increasing your footprints via this kind of acquisition. So I think it's going to be a great business proposition, and the growth story will definitely contribute to the balance sheet.
Right. And this news also comes after the recent announcement that we actually saw that the company is going to be foraying into the FMCG space as well. So, how do you look at that space too? And does that also add enough opportunity for shareholders and potential investors to look at Reliance Industries as a long term potential buy?
Yeah, I think they acquired Campa Cola and bringing back the iconic brand back into, pumping life back into it. And it's only organic and inorganic growth. You can put it that way. You have your retail stores, you have your own products, and I'm quite sure, Sakshi, that going forward, you will have many more products being introduced in the FMCG category by Reliance Industries. Uh, and my sense is that, like I mentioned, huge market, huge population, 35% of it is young population. And I think there's going to be ever growing demand. And not to forget, I think you will see traction from the, urban India, the metro cities, tier one, tier two cities, but the appetite is going to be even much, much higher from semi-urban and rural India, given the agri uptick and the, income moving up to another level with direct cash transfer benefits. So I think it's, again, a great strategy to go ahead.
Right, right. And how long will all of these new acquisitions really take to really trickle in into the books as well? And we've been seeing how Reliance Industries has actually given index beating returns for the last 6 years out of this last 7 years, with 1 year missing. Do you expect with all of these acquisitions it could continue this performance on the street?
So these are just news right now. I think contribution to the balance sheet will take some time. And the best part about the entire acquisition spree is that they have got a huge cash war chest to face any kind of uncertainty. And the more stronger business strategy you come out with and you lay it at the ground level, I think you are not going to go wrong. So you will have to give it a time. Difficult for me to put a time frame or numbers in terms of whether it's going to be 6 months or 1 year. But I'm sure as and when it happens, it will definitely contribute to the balance sheet.
Okay, understood that. Let's now come back to the markets overall. We actually thought that, a lot of things were actually going wrong. Now, those lists have actually changed. Crude is back below $100, so that's now in favor of the markets. Rupee has stabilized. The FIIs are also back. Inflation is peaking out. The earnings are also doing okay. Banks are now reporting good numbers as well. So, I want to understand, stepping into 2023, what could be the next big trigger to generate an upside momentum in the markets?
So my sense is the first one is going to be the Q3 earnings season. I think very soon you will have the curtain raiser for that. Post that, I think every year we speak about 1st of Feb. That's when the Honorable Finance Minister Srimati Nirmala Sitharamanji represents the budget to all of us. Expectation from the budget, uh, whether there will be any kind of tax soaps that will be rolled out, whether there will be any tinkering on, market related taxes, etc., etc. At personal level, whether there is going to be the slab increased, etc. My focus is going to be on how does the Honorable Finance Minister take forward the India growth story. These are all every year one expects these kind of freebies, but my focus is more on infrastructure development, clearing of hurdles in terms of policies, and making it enable for large investors to come in India and set shop, thereby creating employment, which is also a big concern. And of course, a lot of opportunity open up when you have large foreign direct investment coming into India. So my focus is more related to that, and of course, big announcement with respect to how smartly are we going to manage the fiscal deficit, and what are the steps that are taken. Divestment will also be a part, but unfortunately, nothing much has happened on divestment
Yeah.
every time it's been spoken about. So these are the primary things, and my sense is that markets will definitely look forward to earnings season as well as budget, and then of course we get back to business.
Right, but what about the underperforming sectors making a comeback? We have been seeing that the entire 2022 has seen a lot of sector churn. Now, IT and pharma, the major underperforming ones, are making a slight comeback. Is it, merit enough to look at these two sectors for 2023 as potential buy?
So IT and pharma both, Sakshi, qualify for long-term investments, but don't expect pharma to give you the kind of returns that you saw about a year and a half or 2 years back. Selectively, I think what will perform in the pharma universe is the APIs and the generics. Related companies will do well, given the kind of opportunity that lies. But IT, my sense is, if I have to even reflect upon the second quarter gone by and the verbatim given about the business outlook by almost all the IT management companies, they seem to be very very confident that things will improve in the next fiscal. We are also of the opinion that the next 2 quarters, that is the third and the fourth quarter, are going to be challenging for IT. But given the price correction, time correction, I think it's a great opportunity if somebody wants to build a portfolio from a long term point of view to start nibbling into the IT names. Don't go all strength out, but start in a phased out manner, and possibly allocate 25-30% now, and as and when you get the dips, you should consider increasing your allocation to IT sector. We as a brokerage house, the Geojit Financial Services definitely remain positive on the IT and pharma as well.
Okay, and share with us some of your stock ideas for the new year then.
Well, not only New Year, but beyond that, because I don't think Indian markets are going to be performing just for another year. I think
Hmm.
there are multiple year growth story that lies ahead of us, Sakshi. So defense is something that really excites us. We've been positive on it right from the time the government announced FDI in defense and enabled private players to come in. So you have names like, and of course you have certain IPOs that have hit the market post that announcement. So Hindustan Aeronautics Limited, Bharat Dynamics Limited, BEL, Masgaon Docks, Cochin Shipyard. These are some of the defense-related plays. In the private universe, defense-related, L&T, Bharat Forge would be the two names that I can speak about. Banking and finance will continue to dominate and hog the spotlight, Sakshi. So
Hmm.
private sector banks first, followed by certain few select public sector banks, names like State Bank of India, Canara Bank, Bank of Baroda. In the private sector banks, we like ICICI, Axis, HDFC to name a few. And in the NBFCs, I think Bajaj Finance, Mahindra and Mahindra Finance, they will also do well given the demand for credit, Sakshi, followed by autos and cement and FMCG. So stick to these 4 5 sectors, primarily focusing on the large caps.
Right, okay. Gaurang, please do stay on with us. My colleague Tanya Aneja now joins in with a list of all those stocks that are buzzing in trade right at this hour. Tanya, take it away.
Absolutely, Sakshi. So, first of all, Kalpatru Power Transmission and JMC projects, these shares are in focus today. So, Kalpatru Power Transmission has announced that the NCLT has approved the merger of JMC projects with the firm, making it one of the country's largest listed engineering and construction companies. So, if you look at the current share price, Kalpatru stock is up around 2%, whereas JMC is down to the tune of 3%. We also have Strides Pharma. So Strides Pharma Global PT Limited, a step down subsidiary of the company in Singapore, has received 94 million AUD as the deferred consideration for the sale of the company's Australian operations in 2019. So this stock is also in focus on the back of this news. Shares of Ajanta Pharma also, they were up to the tune of 4% today. Now, according to some reports, promoter group entities Ayush Agarwal Trust and Ravi Agarwal Trust plan to offload a 4.6% stake through a block deal, and the deal is likely to fetch around 650 crore rupees to the promoters. Triveni Turbine as well, the share will go ex share buyback today. So the stock is down 8% on the back of this news. Remember, the company had announced a share buyback of up to 54,28,571 fully paid up equity shares of face value of 1 rupees each at a price of 350 rupees per share. Lastly, we have Nykaa as well. So shares of Nykaa continued their losing streak today as well. The stock tanked over 3% to hit a new low of 149.35 rupees. So basically, Nykaa stock is down over 58% from its adjusted 52-week high of 364 rupees and over 56% in 2022 so far. And according to the technical experts, the selling pressure is likely to continue going forward as well. Back to you.
Thanks, Tanya, for that. Gaurang, your thoughts on Nykaa and some of these new age stocks that have been continuously on the downward momentum, no matter what the company takes as a measure to boost the stock. Nothing seems to be working out. About 58-60% down from the all-time high levels. Your thoughts here?
Well, honestly, Sakshi, as a brokerage house, we did not understand the valuation that was commanded by some of this, so-called new age unicorn companies. And the problem with the valuation is there is no set rule for such companies to be measured. For
Hmm.
every analyst, it differs. Secondly, I think they did try some antics in terms of maintaining the share price by announcing certain, steps, which did not augur well again. So instead of managing the share price in the stock market, I think it would be prudent on the management to concentrate on business with respectfully. Uh, no coverage on Nike specific, so I would not want to say buy, sell, or hold. But investors need to be a little bit cautious.
Okay. Well, thank you so much, Gaurang, for being with us on this show and sharing all these market insights on several sectors and the stocks that we've just discussed. And here's wishing you a fabulous New Year ahead and Christmas cheer your way and to your team and to your family as well. Many thanks for joining us onto this edition. All right, and let's quickly look at how the markets are trading at this point in time. Still down in trade, 109 points gone there for the Nifty, 18,088 for the Nifty right now, 60,700 are down about 362 odd points for the Sensex right now, 0.6% of a decline. We'll keep an eye out on the stocks as well. Broad-based sell-off is what you're clearly witnessing, but is there going to be some recovery towards the end of the session as well? That's also something that's possible, so keep an eye out on that because we've been seeing a change over some kind of a decisive move towards that 2:33 p.m. mark as well. So keep an eye out on that, and we'll leave you at that, but do stay tuned on to with us on Business Today TV for a whole lot more coverage from the world of business and stock markets. Many thanks for joining in.